What if I told you that this destructive process can be stopped today? Here is a number that should stop you in your tracks. In 2026, the average American has less than $400 in savings. The average European is not doing much better. Meanwhile, the stock market has become a casino where algorithms trade against each other in milliseconds, and your retirement account swings 10% in a single week based on a tweet or a jobs report. You are told to invest in index funds and wait 40 years, but here is the question nobody wants to answer honestly. What if you do not have 40 years? What if you are 35, or 45, or 52, and you are just now getting serious about building wealth? What if you have already tried the stock market thing and watched your money evaporate during the last correction? This video is for you, and I am going to show you exactly how real people on real salaries are building million-dollar portfolios without touching a single share of stock. Stay with me. What you learn in the next few minutes could completely change how you think about money. Let me ask you something personal. When was the last time you felt genuinely confident about your financial future? Not hopeful, not optimistic, actually confident, like you had a plan that was working and you could see the destination clearly. If you hesitated, you are not alone. A recent survey found that 72% of Americans and 68% of Europeans feel anxious about their financial situation, regardless of how much they earn. That anxiety is not a character flaw. It is a rational response to an irrational system. Here is the truth nobody tells you. The traditional path to wealth was designed for a different era. It was designed for a time when you worked at one company for 30 years, received a pension, and could buy a house on a single income. It was designed for a time when inflation was predictable and the stock market did not experience flash crashes triggered by algorithmic trading. That world is gone. Today, the average salary in the United States is around $59,000. In Europe, depending on the country, you are looking at somewhere between 35,000 and 55,000 euros. After taxes, housing, food, transportation, and the basics of survival, most people have a few $100s left over each month, maybe less. Now, financial gurus will tell you to put that money into an index fund and wait. They will show you charts proving that the stock market returns an average of 7 to 10% annually over the long term. And technically, they are correct. But here is what those charts do not show you. They do not show you the person who invested their savings in 2007, watched it crash 60% in 2008, panicked and sold at the bottom, and then spent the next decade feeling too burned to invest again. They do not show you the emotional reality of watching your net worth collapse, while financial experts tell you to stay calm and hold. They do not show you the sequence of returns risk, which means that if you experience bad years early in your investment journey, your entire timeline gets destroyed. They do not show you inflation eating your purchasing power while you wait for compound interest to save you. And they definitely do not show you how to build wealth in 10 or 15 years instead of 40. Ray Dalio, founder of Bridgewater Associates and one of the most successful investors in history, has said repeatedly that the next decade will look nothing like the last. He warns that traditional portfolios, the 60-40 stock and bond split that your parents used, may significantly underperform as we enter a new economic paradigm characterized by higher inflation, geopolitical instability, and monetary policy shifts. So what do? You find another path. You build wealth differently. Let me show you how. Before I reveal the strategies, I need you to understand something crucial. Building $1 million portfolio on an average salary is absolutely possible, but it requires a mindset shift. You have to stop thinking like a passive investor waiting for the market to make you rich. You have to start thinking like a wealth builder who actively constructs their financial future. The difference is everything. A passive investor puts money into an app and hopes for the best. A wealth builder acquires assets that generate income, appreciates in value over time, and creates optionality. A wealth builder stacks multiple income streams. A wealth builder understands that the goal is not just accumulation, but also protection and growth. With that foundation in place, let me walk you through the 5 alternative paths to $1 million portfolio that do not require you to own a single share of stock. Strategy number 1 is real estate, but not the way you have been taught. When most people think about real estate investing, they imagine buying a rental property, dealing with tenants, fixing toilets at midnight, and needing a massive down payment they do not have. That image keeps millions of people away from one of the most reliable wealth-building vehicles in history. But here is what real estate actually looks like in 2026. You can start with house hacking. This means buying a small multi-unit property, like a duplex or triplex, living in one unit and renting out the others. In many markets, the rental income covers your entire mortgage payment. You are essentially living for free while building equity in an appreciating asset. Maria, a teacher in Ohio making $54,000 a year, did exactly this 3 years ago. She bought a duplex using an FHA loan with just 3.5% down. Her mortgage is $1,800. Her tenant pays $1,200. Her actual housing cost is $600 a month, less than her old apartment rent. Meanwhile, she is building equity in a property now worth $40,000 more than she paid. In 5 years, she plans to refinance, pull out equity, and buy another property. Repeat this cycle 3 or 4 times over 15 years, and you are looking at a real estate portfolio worth well over $1 million, generating passive rental income every single month. For those who do not want to manage properties directly, real estate investment trusts or REITs offer another path. These are companies that own income-producing real estate, and you can invest in them without ever touching a property. Some REITs focus on apartments, others on commercial buildings, others on data centers or healthcare facilities. They are required by law to distribute 90% of their income as dividends, which means consistent cash flow for you. The key insight here is that real estate is not about buying one property and getting rich. It is about systematically acquiring assets over time, leveraging other people's money through mortgages, and building a portfolio that grows while you sleep. Threatening to confine you to a chair. And I'm not talking about quitting your job to become an entrepreneur. The myth of entrepreneurship is that you need to risk everything, work 18-hour days, and bet your life savings on a startup that has a 90% chance of failure. That version of business building is not for most people, and honestly, it should not be. But there is another version. It is called a lifestyle business or a micro business, and it is one of the fastest paths to wealth available to anyone with skills and an internet connection. Here is the math that will change your perspective. If you can build a side business that generates $2,000 per month in profit, and you invest that money into income-producing assets, you will have over $1 million in 15 years, assuming even modest returns. $2,000 a month. That is tutoring 10 students. That is freelance writing for 3 clients. That is running a small e-commerce store. That is offering consulting in your area of expertise. That is managing social media for local businesses. James, an accountant in Manchester, started a small bookkeeping service for freelancers 3 years ago. He works 10 hours a week on it, mostly in the evenings and weekends. It now generates £3,000 a month in profit. He has not quit his job. He has not taken massive risks. He has simply built an asset that generates income. The critical distinction is that a business can become an asset that you eventually sell. James could, in 5 years, sell his bookkeeping client list for 3 to 5 times annual profit. That is potentially a 6-figure lump sum on top of the income he has already generated. This is how everyday people build wealth, not through lottery ticket startup ideas, but through boring, predictable, cash-flowing businesses that compound over time. Strategy number 3 is high-yield alternative savings, and this is where most people leave massive amounts of money on the table. Right now, in 2026, we are in a higher interest rate environment than we have seen in over a decade. This is terrible if you are borrowing money, but it is fantastic if you are saving. Traditional banks still pay almost nothing on savings accounts. The big national banks offer rates like 0.05%. That is not even a rounding error against inflation. Your money is literally shrinking in purchasing power every day it sits there. But high-yield savings accounts, treasury bills, and money market funds are now paying 4 to 5% or more. This is real money. If you have an emergency fund of $20,000, the difference between a traditional bank and a high-yield account is nearly $1,000 a year in interest. Beyond basic savings, Treasury I-bonds offer inflation-protected returns that are currently attractive for long-term savers. Certificates of deposit can lock in high rates for multiple years. Money market funds provide liquidity while paying competitive yield. The point is not that these instruments alone will make you a millionaire. The point is that optimizing your cash position is a foundational step that most people skip. It is free money you are currently leaving on the table. Warren Buffett, perhaps the greatest investor of all time, famously said that rule number 1 is never lose money, and rule number 2 is never forget rule number 1. Before you think about growing wealth, you need to stop destroying it through lazy cash management. Strategy number 4 is dividend-focused fixed income investing, which offers stock market-like returns without the stomach-churning volatility. Now, I know I said this video was about alternatives to stocks, and it is, but I want to introduce you to an asset class that behaves very differently from the equity roller coaster most people associate with investing. Dividend-paying bonds, preferred shares, and income-focused closed-end funds offer something that growth stocks cannot. Predictable, consistent cash flow that arrives in your account every month or quarter, regardless of what the market is doing. These instruments are boring. They will never triple in a year. They will never make you rich overnight. But they also will not cut in half during a market panic and leave you questioning every financial decision you have ever made. Consider municipal bonds if you are in the United States. They pay interest that is often exempt from federal and state taxes, which means a 4% yield might actually be equivalent to 5 or 6%, depending on your tax bracket. For European investors, government bonds from stable countries offer similar security with competitive yields in the current rate environment. The strategy here is to build what is called an income ladder, a portfolio of fixed income instruments with staggered maturity dates that provides consistent cash flow while protecting your principal. If you systematically invest $500 a month into a diversified income portfolio yielding 5%, and you reinvest those dividends, you will have over $300,000 in 20 years from contributions alone, plus another substantial sum from compound returns. Combine this with the other strategies and you are well on your way to the $1 million mark. Strategy number 5 is the most important one, and it is often completely overlooked. It is income maximization and strategic career building. Here is a truth that financial YouTube rarely discusses, because it is not as exciting as crypto speculation or options trading. The single greatest wealth building tool you have is your ability to earn money. Every additional dollar you earn is a dollar you can deploy into the assets we just discussed. And unlike investment returns, which are uncertain, your income is something you can directly influence through skill development, negotiation, career moves, and strategic positioning. Let me give you some specific numbers. The difference between staying at the same company for 10 years versus strategically switching jobs every 2 to 3 years is often 30 to 50% in cumulative lifetime earnings. People who negotiate their salaries earn on average $7,000 more per year than those who accept the first offer. That is over $200,000 across a career. Consider developing a high-income skill on the side: coding, data analysis, sales, copywriting, financial modeling. These skills command premium rates whether you use them in employment or freelancing. A single high-income skill can add $20,000 to $50,000 annually to your earning capacity. Then there is the concept of career arbitrage. Some careers have vastly better compensation trajectories than others. Strategic moves between companies, industries, and even countries can dramatically accelerate your earning potential. A software developer in San Francisco might earn twice what they would in a smaller market. A finance professional moving from a small firm to a bulge bracket bank might double their compensation. The point is that wealth building is not just about what you do with your money. It is about how much money you have to work with in the first place. Increasing your income by even 20% while maintaining the same lifestyle creates a wealth-building engine that accelerates everything else. Now, let me bring this all together with a realistic action framework you can implement starting this week. If you are feeling overwhelmed, that is completely normal. I just gave you 5 major wealth-building strategies, each of which could be its own course. But building wealth does not require doing everything at once. It requires starting somewhere and building momentum. Here is your 30-60-90-day plan. In the first 30 days, focus on foundation. Open a high-yield savings account and move your emergency fund there immediately. This takes about 15 minutes and will earn you hundreds or thousands of extra dollars per year. Review your current cash positions and optimize every account. Calculate your exact monthly surplus, the money left after all bills and necessities. This is your wealth-building fuel. Be honest about the number. Next, audit your career position. Are you being paid fairly for your role? Use resources like Glassdoor, LinkedIn salary insights, or industry surveys to benchmark yourself. If you are underpaid, start building your case for a raise or begin exploring other opportunities. In days 30 to 60, focus on education and decision-making. Pick one primary wealth-building strategy from the ones we discussed today. Do not try to do everything. Choose the one that resonates most with your situation and interests. If real estate excites you, spend this month learning about your local market, financing options, and house hacking strategies. If business building appeals to you, identify a skill you have that others would pay for and explore how to monetize it. If fixed income investing aligns with your risk tolerance, research the specific instruments available to you and consider consulting a fee-only financial advisor. During this phase, also begin tracking your net worth monthly. You cannot improve what you do not measure. Create a simple spreadsheet or use a free app to monitor your assets and liabilities. Watching your net worth grow, even by small amounts, creates positive momentum. In days 60 to 90, take action. Make your first investment in your chosen strategy. Buy that first bond. Make that first rental property offer. Launch that first service. Take that first client. Start small. The goal is not perfection. The goal is progress. Also during this phase, identify and address your biggest income opportunity. This might be asking for a raise, applying for a better position, starting a side income stream, or developing a new skill that commands higher rates. The most important thing is to begin. Imperfect action beats perfect paralysis every single time. I want to address some objections you might be having right now. You might be thinking you do not have enough money to start. I hear you. But here is the reality. Waiting until you have enough money guarantees you will never have enough money. Start with what you have. If that is $50 a month, start with $50 a month. The habit matters more than the amount in the beginning. You might be thinking you do not have time. I understand. You are busy. Life is demanding. But building wealth does not require hours of daily attention. It requires a few strategic decisions implemented consistently. House hacking does not take more time than regular home ownership. A small side business can operate in 10 hours a week. Optimizing your savings accounts takes an afternoon. The time objection is usually a priority objection in disguise. You might be thinking you have already made too many mistakes or started too late. This one breaks my heart because it keeps so many people trapped. Here is the truth: you cannot change yesterday, but you absolutely can change tomorrow. Every single wealth-building story I have ever heard includes setbacks, mistakes, and periods of frustration. The people who build wealth are not the ones who never fall. They are the ones who keep getting up. Let me leave you with this. $1 million portfolio on an average salary is not a fantasy. It is a math problem with a human element. The math shows that consistent contributions to appreciating and income-producing assets, combined with strategic income growth, leads inevitably to wealth accumulation. The human element is whether you will actually do it. Most people will watch this video and do nothing. They will agree with the ideas, feel momentarily inspired, and then return to their regular patterns. They will tell themselves they will start next month, or next year, or when conditions are better. But some of you will be different. Some of you will take one action today. Open that high-yield account, calculate that monthly surplus, research that first property, draft that first service offering, apply for that better job. One action leads to another. Momentum builds. Suddenly, a year from now, you will look back and realize you have made more progress than you made in the previous decade of thinking about it. You are capable of building wealth. The system might be stacked against you in some ways, but the path exists. Real people are walking it right now, on salaries just like yours, in circumstances just like yours. The only question is whether you will join them. If this video gave you value, if something clicked for you today, I need you to do something for me. Like this video so the algorithm shows it to other people who need to hear this message. Subscribe if you want more content about building wealth on realistic terms. And drop a comment below telling me which strategy you are going to focus on first. I read every single comment, and I want to hear your plan. This is your moment. This is your year. Let us build something that lasts. I will see you in the next one.